Joining us now, first on CNBC, the On co-CEOs, Maurer and Hoffmann. It's good to see both of you. Good morning. So Marc.
Thanks for having us.
Not a lot of other retailers reporting 78% sales growth. What are you seeing from the consumer right now?
Yeah, we're very, very happy with our Q1 results. The demand for the brand is super strong. We just launched a new cloud surfer, which was the biggest launch ever. Very positive, the outlook also on the pre-orders that we have in the accounts for Q2, Q3, Q4. So really, really positive news across the board.
Martin, who are you taking share from?
Well, I think we win with the consumer who wants to have a product that is truly rooted in innovation, performance, that has a strong sustainability DNA, and that really lives run culture. This is what we do. And those are people that actively run in the product every day, some faster, some more in a casual environment, but more and more are also using the products in an everyday environment. But it's all about movement, and this is what we are for. We want to inspire the human spirit through movement.
But, I mean, Nike has dominated in the running category lately. I have to think that this is making a dent. Does the competitive environment impact you right now, or are you continuing to see these signs of very strong demand?
Hey, we're trying to bring amazing, superior product to the market. So we just had Hellen Obiri winning Boston Marathon. We have some of the best tennis players, the world number one. We won a couple of very important track and field races. So we very much feel we're proving that our product is very, very strong, is also very, very sustainable. And this resonates with the consumers. This allows us to grow on such a strong rate across the board, and that's what we're focusing on.
We're seeing especially strong growth in the wholesale business in North America. And it's interesting because that's not a point of strength for a lot of the other brands out there. What do you think is driving that? What are you seeing from the orders and also from the promotional side of things right now?
So what we see with our retail partners is that they also see a very strong demand for the On brand. So be this at Dick's, be this at JD, at Foot Locker, at Fleet Feet, as at many of the run specialty accounts. We see the general environment being discounted, but On is a brand that focuses on premiumness, on full price sales. And this is where we continue to drive. We selectively expand our presence in wholesale. So we just opened up 50 more Dick's stores. So we really want to reach the customer where the customer is shopping and talking to the right consumer. And this is what we do on a global scale.
Marc, I'm curious where your head is right now on inventory management, because we've seen some high-profile examples where companies obviously were saddled with too much, but others who stepped on the gas and ended up selling quite a bit, and it led to volume. How are you planning for the rest of the year?
Yeah, so for us, what's very, very important is that we can capture the demand that's out there with new products. So we have inventory growth, but it's fresh product, and that product will allow us to also capitalize on, potentially even higher sales than what we currently guided. So this is what we're looking at, and we have to be, clear that part of why the inventory is a bit higher is that the factories have caught up very, very quickly. Transit times on the trade lanes, on the ships have come down, and this is what you're basically seeing reflected in the inventory. But we are really, really not worried about it because it will allow us to capture on the demand, and it's fresh products.